Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro-dollar. A counter-to-the-counter key reversal down and bearish engulfing pattern yesterday, if only just on the latter, as after the previous session's immediate countering bullish engulfing pattern and bullish closing white Mariposa. Prices continue to hold not too far away from the secondary hard-to-reach target X in the 117.88 area for the March to early April based reverse head and shoulders pattern. This is the target that we came close enough to last Friday for me to call it reached, but I decided to still leave the label up there on my daily chart just in case we shot through it. On the top side, we have the June 2025 high at 118.29 and a capping action from the June 18 high at 118.51. Interestingly, beyond 118.51, we have little as resistance bar the February highs around 119.26 to 119.28 until a series of downtrends start from 120.23 onwards. Meanwhile, below, we have congestion between 116.75 to 117.07, containing the moving averages, notably the slowly rising medium moving average, currently 117.07, the October 2021 high at 116.92, and the previously broken bright red lower bull channel line, currently 116.72, of the July, let's call it from 116.72 up to 117.07. But the lower bright red lower bull channel line is currently at 116.72, and that's of the July 25 to March 26 bull channel. Now, so far today, a test lower, but now a reactionary move back up, though still well within yesterday's range and looking a bit like an indecisive spinning top right now. Cable, aka sterling against the US dollar. An immediate countering bearish double yesterday after the previous session's bullish engulfing pattern. The price fall once again stopped ahead of the slowly rising mauve medium moving average, which is below, currently at 134.58, but we managed to finish back under a wide band of congestion between 135.16 to 135.81. Further overhead, we have the dark blue broken, now possibly repaired, July 2015 to January 26 shallow upper bear channel line, currently 135.62, and then a small congestion band between 136.21 to 136.43. Looking below, we have the September 2020 high at 134.83 and the rising mauve medium moving average, which is not necessarily that good a support. We might have better support from the current combination of declining short medium moving average, which is currently 134.32, and the 2024 high at 134.34. Now, so far today, a lower open and test low, but we've since risen again. We are back within that 135.16 to 135.81 congestion, if only just. Testing resistance at 135.35 and looking like a possible bullish piercing line pattern right now. US dollar against the Japanese yen. A second bullish white soldier yesterday after the previous session's reactionary inverted hammer pattern and bullish thrusting pattern. Prices pushed quite far back up and over the important breached bright red lower time, currently at 159 even, of the recent showrunner here for this market, and that's the mid-September 25 to late January 26 bullish Andrews pitchfork. As I've said all this week, I am quite prepared to finesse this bullish Andrews pitchfork into a shallower bullish shift pitchfork if that is what the market desires. But so far this question has been, it's not actually said to me to do that just yet, but I'm happy to do that if it happens. So far, this question has been raised by the market, but it's not been justified such a move as yet. Now, further down is the green short medium moving average, currently at 157.67, which held up the market last Friday, and below this is the shallowly rising mauve medium moving average, currently 157.08. Meanwhile, overhead we have a wide congestion made up from the May 1990 high at 159.61, then congestion at 160.05, and finally the April 1990 high at 160.34. In the bigger picture, prices are still within the September and November 25 to date bright green bull channel, which is currently 155.38 to 162.16. Now, previously I had, after looking at this year's action and determining we had a mid-January to mid-March double bottom pattern, I had laid out a primary target X up in the 161.49 area and a harder to reach secondary target X1 up in the 163.19 area. These look increasingly unlikely as prices have stalled under that 160 even area, and I'm considering retiring them. Now, so far today, the market is seemingly trying to stabilize over the bright red lower tone and towards the May 1990 high, but it's getting squished in the process. Something we'll have to give, but for now it's looking like an indecisive doji cross at the moment. US dollar against the CNH, the offshore Chinese yuan. A reactionary key reversal up and bullish engulfing pattern yesterday after the previous session's bearish second black crow. Despite pushing up and out of it, the close showed that the market is still captured in between the overhead April 23 low at 682.85 and below by the March 23 low at 680.71. And the low just under this at 680.41 possibly, and that was established last week. Overall, the market remains within the dark blue mid-January to early March, mildly bearish shift pitchfork in between the overhead dark blue upper time, currently 683.85, and dark blue lower time below, which is currently at 689.94. So far today, a dip down after being capped by the April 23 low overhead and looking like an indecisive doji cross or indecisive spinning top right now. It's probably looking more towards, I think, actually possibly being a dragonfly doji, but it's a bit early for that, to just any of those three, to be honest, right now. US dollar against the Brazilian real. A possible inverted hammer pattern on Monday, traditionally seen as a bullish reversal pattern, though the data does not support that view, with some 6 to 7 times out of 10 the market sees it as a bearish continuation pattern, this after the previous session's larger hammer pattern. Despite not making a new low, Monday was still the lowest close since March 2024. Below, we still have support of the 50% Fibonacci line, and that's of the quite large October 2018 to December 2024 move at 494.74. And below this, the next support is the 2021 low at 489.08. Meanwhile, overhead, we have resistance at the veteran, but not quite so old, 50% Fibonacci line of the July 19 to December 24 move at 501.48. This provided the high for the last Thursday's session. Interesting, one could regard the whole of the last week's actions, because of the quite nearby to each other closes seen last week, as a possible small halfway hesitation. Now, it is an idea, but just for now, just keep it in your mind rather than actually anything to do anything about it at the moment. Overall, the market is still within the now veteran and very successful dark blue mid-December 24 to mid-April 25 bearish shift pitchfork. This long-running dark blue bearish shift pitchfork is still a very excellent showrunner here for all this market. The market is in between the dark blue lower time below, which is currently at 484.33, and the dark blue middle time above, currently at 510.24. US dollar against the Mexican peso. An indecisive spinning top pattern yesterday that was also a key reversal up. This after the previous session's immediate countering shooting star pattern. Yes, it was likely a type 1 bearish pattern actually. Now the top side saw resistance but was not capped. Saw resistance but was not capped by the recently doubled up upper bear channel line, currently at 1735.51. Instead, the July 17 low at 1743.74 did that. Further overhead, we have the July 2017 low at 17, we already have that one. And then beyond that, we have the flatlining short-medium moving average, currently at 1750.81. Whilst further down, we have the March 2016 low below at 1709.23. And the April 2016 low at 1703.89. Actually, we have congestion below seen over most of February between 1710 to 1730, and we finished for a third session right on the top of it. Now, so far today, not that much. A small move lower, dipping into that wide 1710 to 1730 congestion, but looking like an indecisive spinning top, or maybe an indecisive doji cross right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.